Hey there, and welcome to Real Investment News. I'm Mike O'Neill. The markets are continuing their climb through record high territory today. The Dow is up about 10 points, the S&P is up 7, the NASDAQ is up 44 points. Now, in our last report, we told you how shares of Netflix jumped nearly 10% overnight. As a matter of fact, when you take a look at it right now, yeah, it's up 10.6%. That came after the video streaming giant released its earnings report for the fourth quarter. Now, it matched the earnings per share estimates and it barely beat revenue, but the company says it also signed up 8 million new subscribers, even though it had raised its monthly subscription fee by $1. But in a world where the stock market seems like it has no limits and people are buying cryptocurrencies based on virtual dogs and cats, critical analysis is going by the wayside. So I wanted to take a moment to take a look at some of the stranger things in the report. Okay, yeah, I'm a fan and a subscriber. Anyway, now, first of all, Netflix is spending a lot of money. In its fourth quarter, its free cash flow was negative $524 million. That adds up to just over $2 billion in all of 2017, and the company wants to spend more, pledging to spend up to $8 billion on more original content like Stranger Things and The Crown. But Netflix doesn't give out viewing data, so while there is a big buzz around these shows, we don't have any real information about their actual popularity. Plus, last spring, Netflix did away with its 5-star rating system. They called it confusing for viewers and only gave them the option of a thumbs up or thumbs down, which actually may have worked in favor of the Will Smith fantasy buddy cop drama Bright, which was panned by critics. But a sequel is already in the works. Also, hedge fund manager Doug Kass notes that Netflix is luring subscribers by advertising that it has Disney films. But Disney has already announced it is preparing its own streaming service for 2019, so they're not going to be around for long. And since Disney bought 21st Century Fox, well, their film and TV assets could vanish from Netflix too. Kass also points out that the 32% increase in revenue in Q4 was actually a drop from the increase in the third quarter, and that Netflix is being heavily shorted, 27 million shares, which is about 8% of the float. So Kass says he's passing on Netflix. Plus, with the stock trading at 99 times forward earnings, it could theoretically take nearly a century for Netflix to repay investors through its earnings. And just a few minutes ago, the Buckingham Research Group lowered its rating from buy to neutral because of all these same reasons. So can Netflix rise above all of these challenges, or will it face its own judgment day?
It's judgment day. Which is why we need as much help as we can get.
Hey, that's it for now. Please remember to follow us on Facebook and Twitter and YouTube, and you can see more of our reports at realinvestmentnews.com. I'm Mike O'Neill, and we will see you with another report in a couple of hours.